All right, folks, good evening. Let's go ahead and get airborne with our demonstration of our full throttle training program. This is going to be kind of like a sample of the one of the 8 sessions that you get when you become a full throttle member. Happy to report that this is the quickest take rate that we've seen with our full throttle program in years that I can remember. So very happy that a lot of you have jumped on board between this afternoon when we opened up our full throttle slots. And right now, I just updated this a little while ago, went for a run down on the beach here. And then we're looking pretty good. So as I said, by tomorrow afternoon, most likely we're going to have our 50, and then we're going to shut the doors and get airborne, hopefully with you. Yep, whoever just asked, the link's on the screen, but we can obviously go to the page here. Pretty easy to remember. All you have to do is head to go.topgunoptions.com/getft. And like I said, what we're going to do tonight is kind of a sample training session of what you're going to get. If you scroll all the way down here, this is the full throttle training that you're going to get. As soon as you become a member, you can log in and start watching the previous sessions. We actually just finished a full throttle 8 full throttle sessions last Thursday night. We wrapped up with Iron Condor. So you can go in there right now and go back and start with session 1 and go all the way through session 8. A lot of TGO members that have been here for years. And remember, folks, once you become a full throttle member, you never have to pay for this training again. If we do, another full throttle group come the fall, you get access to that training as well. And we charge non-TGO members $495 just for this training alone. So as long as you're a TGO member in good standing, you get access to all the new briefs that we do. And I was about to say, a lot of the TGO members here have said that, hey, I've watched this training over and over again, and I pick up something new each time. And that's pretty cool to hear from folks that have been here for a couple years, that they pick up new stuff every time they watch these. So make sure you watch these a couple times. Also, as soon as you get airborne at Top Gun Options here, you get access to the 3 skill-based workbooks. Obviously, start with primary, then knockout intermediate, then knockout advanced. There's great quizzes in there. This is just great content. These are your flight manuals right there. And then obviously you get access to all the live trade briefs that we do here at Top Gun Options. And that's if you do the max, full throttle, max after. About 80, I'd say about 85% of our current members are in the max program, whether it's annual or monthly. And then we have folks who, kind of want to dip their toe in the water, either defensive or offensive. The difference between these 3, defensive, you get access to the accelerated retirement portfolio that we took a look at this afternoon. Offensive, as the name implies, hey, I want to dogfight this market. You do the weekly options brief. And then max, you get obviously absolutely everything we do here at Top Gun Options. $19.95 for a year, $24.95, and then $29.95 for a year. If you're interested in monthly, just kind of, this is one big image here. You see this big kind of billboard looking thing. All you have to do is click on that thing, and that'll take you to the monthly order page right here. Max is $295 a month. Offensive is $245, and then defensive is $195 a month. Industry leading, folks. We've been around for 10 years. Not too many financial training companies are out there because they just don't have the reputation that we do. And we use the demo-do approach, right? I'm going to demonstrate tonight in training, and then tomorrow in a live trade brief, maybe we'll take a look at the tactic that we're going to cover tonight. Okay, let's cover some things. Yep, it's right there. Go, Michelle. It is go.topgunoptions.com/getft. Stands for Get Full Throttle. And correct, just kind of click on this big image on the page there, and then there's the monthly subscriptions. We had a lot of folks. Most of the sales that have gone so far this afternoon have all been the Full Throttle Max annual. Obviously, if you do the math, folks, it's cheaper to do the annual subscription, but if you just kind of want to give us a test flight for a couple months, I guarantee you in about 2-3 months, you're going to pick up the phone and say, hey, man, can I upgrade into an annual membership? And, of course, the answer is going to be yes. Here is the replay page. I posted the replay from this afternoon on this page right here. We looked at closing the CME spread from last week for nice profit in 1 week. Essentially, that CME bear call spread could have paid for a defensive annual subscription with just that one trade. And then we covered a very, very important tactic called a trudge. We got bullish on volatility today, and I'm going to cover a couple. Since we actually met this afternoon, a lot has gone out, and it ain't good. And this, what is it, sextuple top. We have not been able to pierce this 2,800, and I think we're about to head lower, and we're going to see a big spike in volatility. So I sent out the trade today, and here's the replay on this page. Here's yesterday's or Monday's replay, and then here's Tuesday's replay. So I did put the weekly options brief on this page for free. This brief was just for members on Monday, but decided to be a good guy since a lot of you yesterday said, hey, could we watch the weekly options brief? So there it is. There's the weekly options brief that we did on Monday. And then here's yesterday's primary live trade brief where we took a look at that burner trade on China on FXI. Okay. And I think that's about it as far as administrative items. But really interesting market action today, folks. The Dow at one point was up 100 points. At its lowest, it was down almost 200-300 points. Very, very wide trading range today, which shows that we're kind of on the precipice of, maybe a pullback here. And looking at the great article on Seeking Alpha today, beware gamma gravity. S&P 2725 opens the trap door to what? December lows. Okay, so 2 weeks ago, the market seemed stuck in a constant daily melt-up as March option expiration quadruple witching, right? Had an explanation for the relentless bid in stocks which took place even as investors were consistently dumping shares for 12 weeks. So, folks, we covered this earlier today. The number one buyer of the S&P 500 year to date has been who? The S&P 500. So things have changed drastically in the past week or so. The S&P once again is below this sextuple top of 2,800, a level it simply refuses to breach consistently since October. Now what has happened? Companies have also entered the buyback blackout period. The most active buyer of stocks is on the sidelines for the next month as Q1 earnings start to come in. So if you listen to me, folks, or if you didn't listen to me, sit up straight in your chair and listen. The number one buyer of the S&P 500 year to date has been the S&P 500. Now we're entering a blackout period before Q1 earnings. And there is a very, very distinct possibility that we start heading a little bit lower. Okay? I briefed you yesterday that tech companies have pre-warned that their earnings are going to be awful, the most pre-warning since October of 2008. Does anybody remember what happened around October of 2008 and what the market did after that? So this trade that we covered this afternoon, let me make sure. Did everybody see the trade from this afternoon? The bullish double vertical on VXX. Let me go ahead and pull this up. I'll put the link in here just in case you didn't. I sent it out, and it was sent out to all the folks that right here. Let me just post this in here because this is, even if you don't become a TGO member, I think you need to have this trudge on. And remember, we define a trudge as something that is a trade, right? We think a trade's going to make money, but it also serves as a hedge in case the market rolls over and volatility spikes. So yeah, Steve, so everybody look in the chat box. Here's the link to the trade that we covered today. And somebody had asked earlier, hey, Wiz, what's the difference between a bullish double vertical and an iron condor? And it's very, very, those things couldn't be more opposite, right? A iron condor, which we're going to cover tonight, is a range-bound trade, right? When you put on an iron condor, you say, hey, I think something's going to stay in this range, right? We actually have an iron condor on XLY going down range in our portfolio. That's an iron condor. What we covered this afternoon is a double vertical, which means you think you're going to see a massive move in some direction. And we talked this afternoon about how I think volatility is going to absolutely spike, right? We're kind of in this waiting for Godot period in this market. We're kind of in this holding pattern, waiting for what? Well, the things that are on the horizon with are Q1 earnings, and the other potential thing on the horizon is what? China trade deal. This is, and we kind of laughed at what's going on here. The president saying, hey, we're going to get a huge, excellent trade deal. Nobody does deals better than me. And then you have his United States trade representative, Ambassador Lighthizer, saying, it wouldn't be, here's his exact quote. We're working on it. If there's a great deal to be gotten, we'll get it. If not, we'll find another plan. So it ain't sounding too great, right? We have a trade on that we covered yesterday called a burner trade on FXI, because I think the announcement of, you know what, a bunch of guys running to the microphone saying we have a deal is going to see an initial pop, right? You're going to see that. It's going to be initial short squeeze and a little bit of a pop, and then we're going to drop. I think this market's going to sell on the news. So not to beat a dead horse, you have got to watch the replay from this afternoon's brief. It's either on the replay page right here, or it's on the link that I just shared with you. These are the trades that we covered this afternoon in the Accelerator Retirement Brief. We covered a bear call spread on CME Group. Good looking trade. And then we covered this VXX hedge right here. I really, really, really like this hedge, risking about $6,500 to maybe make 12. I didn't get filled on this. I'm going to keep on trying to get filled on it tomorrow. And as a reminder, we have our final brief tomorrow at 1 o'clock it's called Analyze Your Trade and Debrief. And then hopefully we'll have all our 50 slots, and then we'll be done here. Okay. All right. So let's talk tonight about an iron condor. Like I said, is a range-bound trade. Let me show you an example of an iron condor that we have on XLY. Now, some of you might be sitting here saying, all right, well, what the heck is the XLY? Let me analyze this. Put the order ticket up. All right, so the XLY, ladies and gentlemen, is the Select Spider Fund Consumer Discretionary ETF. Okay, consumer discretionary. Let me show you what's actually in the XLF, what the holdings are. So you can just Google it, XLF holdings. Okay, so the holdings of the XLF, where are they? Right here. Where is it? Let me click on holdings. Where is it? I'm sorry, XLY. Duh. I keep saying XLF. XLF is the financial ETF. XLY. Thanks. So here we go. Holdings. So XLY. If I could type it in there. Let me search XLY, not XLF. Jeez. There we go. All right. We'll get there. XLY. Yes, right here. Okay, here we go. Finally got there. Sorry about that. So here we go. Here are the top holdings in the XLY. Number one, look at this. Actually, they've increased this. The last time I looked was about, sorry about that, 21.9% was Amazon. They've upped the weighting to 24%. That's pretty cool. So we got Amazon, Home Depot, Mickey D's, Nike, Starbucks, Lowe's, Booking, TJX, GM, Target. So you can see the weight in the XLY. We are long-term bullish out to January of 2021. So we have a position on right here that is called synthetic stock. So what we did, and don't want to confuse with too much tactics here, but what we did with here's how you create synthetic stock. You hop in your time machine and you fly all the way out into the future, right? So I am bullish as far out in time as I can be, all the way out to January 2021 on the XLY. Why am I doing that? Well, the main reason is, and when you become a member and we cover this tactic, is because doing flying in your time machine hopping in your Super Hornet and flying all the way out to Jan 21, it would cost about $30,000 ish to do synthetic stock with one contract on Amazon. So that would eat up a lot of capital in my portfolio. So what we do is we use the XLY as a good proxy for Amazon, right? Let's just take a look at the two charts. Let's take a look at Amazon. Let's bring up the chart, kind of a 1 year chart, and then I'm going to overlay. I'm going to click compare right here. I'm going to click XLY. Take a look at Amazon and the XLY. They look pretty damn close, don't they? Well, there's a reason for it. Is because almost 25% of the XLY is Amazon. Okay, so it's very expensive to do a synthetic stock position on Amazon. So instead, we chose XLY. Okay, so and this is what we call kind of our sector targeting. So I'm gonna, and I introduced you to this over the past couple briefs. We have about 7 or 8 sectors or names that we're trading in, that we're long-term bullish in out to Jan of 21. Okay, so what we want to do, since we're long-term bullish, for example, on XLY out to Jan of 21, why don't we trade what we call the front months in this name? Okay, so it makes no sense for us to be, you know what, Wiz, I completely agree. Starbucks, Nike, Amazon, all these things are going to be doing great in a couple years. So let's get long-term bullish on this one. It's not, it makes no sense to put this trade on and then forget about the XLY. Okay. Now I'm going to be honest with you. I do, every Friday I do a lot, or I did some coaching today. Friday's my main coaching day, but it cracks me up on some of my initial coaching sessions when I kind of take a look at people's portfolios. And my buddy Doc, I don't know if you're in here, Doc. He's a plastic surgeon down here in Boca Raton. When we first started coaching, the man had 33 positions in his portfolio. I'm not going to say any other names, but there's a lot of other coaching folks that I've dealt with here at TGO. If you're a retail trader, ladies and gentlemen, or investor, it's 7 to 12 positions max, period. It's amazing to me that people, I look at some portfolios, people are like, you know what, I don't even know what that is. Or I'm like, oh my God. I start twitching when I see stuff like that. If we're long-term bullish on MGM, Raytheon, XLY, what else do we have? We got Brazil. What else? What am I missing? Visa. So let's just say we have about 7 names we're long-term bullish out to Jan 21 on. Just trade in those names. Visa, MGM, Raytheon, whatever. You should be just doing spreads or upside calls or whatever in those names, folks. That keeps you busy enough, right? I don't physically understand how somebody can. I can't. I do this for a living, folks, and I don't monitor 33 positions. That's physically impossible. So I'm going to teach you here at TGO to slim it down, man. If you have 7 names that you're trading in, you stick with those names. You follow the news. You get smart on them. 33, anything more than 12 positions as a retail trader, you're throwing darts. Unless you're sitting here for 8 hours following all 33 names, you're gambling, folks, and we don't do that. Okay? So why am I giving you this little bit of a speech? Because we have a long-term position in this portfolio on XLY. We have synthetic stock. And then what am I doing? Not only am I selling upside calls, but I have this iron condor on. Again, an iron condor is a range-bound trade. You think that something is going to stay in a range. So if we look at the XLY here, it kind of looks like, and this red line here's the 50-day moving average. And this right here, these are called Keltner channels, okay? There's some math behind it. Just know this is a pretty good indicator, okay? If we look at XLY, we know that it's had this nice recovery since the December lows, kind of on a nice looking climb schedule, but it also seems to trade within a range here, right? About 114-ish to the upside. and about 109 to the downside. Now, the tactic that we're going to cover tonight in Iron Condor means exactly that. You think something is going to stay in a range, right? Now, I've said this a couple times, and you're going to hear me as a TGO member repeat it often. No broker that I know lets you trade off the left side of a chart. But a lot of other training services out there look at the left side of a chart and try and do what? Tell you what the right side of the chart is going to look like. That is absolute guessing. Folks, I do technical analysis. We look at volatility. We look at fundamentals. You should look at everything. Not bad-mouthing technical analysis, but, I mean, you bring up technical analysis at the Chicago firm I worked in, and they throw you out the window. I mean, the owner used to say, hey, man, we used to burn witches, too, and you're going to talk to me about technical analysis. So let me tell you that there's a little way, there's a secret way that we can determine what the right side of the chart might look like with a certain degree of certainty. You ready for this? It's called the at the money straddle. So the options market, ladies and gentlemen, is very, very, very efficient. Okay? If you look at options and you understand kind of what the options market is, it's a contract, folks. You're going out in time and agreeing with a certain date and a certain price, right? There's real estate contracts, there's boat contracts, there's house. You've dealt in options your entire life. But check this out. Here's what I'm going to do, because some people, you could look at this chart and say, all right, Wiz, I think kind of resistance is up here at 114, and I think support's down here at 109 or 110. Okay, great. But let me show you how an options trader kind of looks at what range this stock might be trading in. Or actually, it's an ETF, obviously, folks. So let's go out a month. It's March 27th. Let's just go out to April 26th. And what I'm going to do is look at what is called the at the money straddle. Now, don't worry about what that is. I'm going to teach you this type of tactic, but I'm going to do this real quick. Okay, so take a look at this. You see, I'm going to culturally appropriate from Elizabeth Warren here. You see the top of this TP? You see the blue line? That's the current price of XLY, right? 112.58. There's no 112.58 strike, so I got to use the strike that's closest. So the math is going to be a little bit off on this, okay? So take a look at this. If we literally had a 113 strike, the math would be perfect. This little blue line would go straight through the top of that triangle. But look at this, folks. And if we did have a perfect 116 strike, this would be a 60% probability down here. So take a look at these two numbers. Ladies and gentlemen, the options market is saying with 60% probability that XLY is going to stay above 109.55 and below 116.45. Okay? Yep. Folks, trust me, this is just kind of a quick demonstration tonight of the type of training you're going to get. Markets closed, we can hang out. But the at the money straddle is the options market telling you, hey man, with a 60-degree certainty, we think it's going to stay between these two strikes. Right? Now, obviously, the fighter pilot and options trader in me goes, well, there's a 40% probability that it flies outside of those. I get it. Okay, but we can mitigate our risk. But this is a good place to start when you're taking a look at an Iron Condor. What strikes to use? Let's just round down and up. 110 and 116. Okay? So, looking at the options market, they're saying a month out from now, most likely the thing is trading between 110 and 116. How does that look? Kind of eyeballing it here. Well, we said we haven't even been up to 116 in, let's take a look at a year chart. Well, before the Fed came in and ended capitalism, 118 was the highest. So yeah, I mean, we're starting to get back up here. So 116 is right there. And then to the downside, 110. Yeah, all right, we've risen through 110. So let's start building this Iron Condor trade, right? So remember, an iron condor is a range-bound trade. We think that it's not going to go above 116 or below 110. So the tactic that we use if you don't think something is going to go up is called a bear call spread. The tactic that you use if you don't think something's going to go down is a bull put spread. Okay? So an iron condor is just simply two spreads facing each other, so to speak, right? An iron condor is saying, dude, you ain't going above this, and dude, you ain't going below that. So bear call spread, bull put spread. So let's start building this trade together. Let's bring up the options chain, and we'll go a month out. Now, let me go back to Amazon real quick. When do tech earnings start? Amazon, oh, you know what? So this might expire right around when Amazon is set to report earnings. Now remember, this says estimated. It doesn't say confirmed. The only place to confirm when Amazon earnings is on the investor relations page. It ain't on the Trade Monster platform. It ain't on Earnings Whisper. It ain't on Google Finance, folks. The only place legally, officially, where you find out when Amazon earnings is on the IR page, Investor Relations. So this is, I put a little sticky or a note, not to hold this trade through earnings. I would close this iron condor before Amazon earnings, okay? Because this thing is most likely going to move on earnings. I do not trade earnings at Top Gun Options. It's a waste of time and money. Nike, perfect example. Take a look at Nike stock. Nike reported what? Great Q4 earnings on Friday. The stock gapped down about 7%. Why? Ladies and gentlemen, earnings are looking in the rear view mirror. Nobody cares about how you did. Everybody cares about how you're going to do. What did Nike do? Hey, we had a great quarter. And the future is going to suck. Next quarter, awful. Global slowdown. That's why you don't trade earnings. It breaks my heart when people are like, oh, Wiz, I had this earnings trade on. Nike blew earnings out and the stock went down. Duh. That's why you don't do that. Do not trade earnings. Oh my God, man, I was right about earnings and I lost money. Don't trade something where you can be right and lose money. Hell, I taught you today that with the Brexit, I was wrong and we made $44,000 trading volatility. You'd rather be wrong and make money than right and lose money. Okay? So let's not hold this iron condor through earnings. We could actually back it up a little bit if you're like, you know what, man, I'd forget about that. Let's bring it in a week and maybe do the April 19 expiry. So what we want to do maybe is actually with April 19, look at this. There's a 112.5 expiration. So we can do a pretty damn close at the money straddle. So let's do the at the money straddle for this one. Okay. Let's do the at the money straddle for this expiration instead. 112.5. So look at that, folks. You see how it's going essentially straight through the top of the Elizabeth Warren TP? Look at that. That's perfect. Almost perfect because it's just off by about 8 cents. So this one says 109 and 116. Okay. Are they? Let me see. Nope, these are the April 19s. These aren't, so there we go. So this one is the 109 and the 116. Okay. So let's start building this trade. Let's start with the bull put spread. First of all, ladies and gentlemen, the options market is incredibly efficient, right? The options market ain't going to pay you a lot of money for a layup trade, ladies and gentlemen. If you put your strikes rate at the money straddle, it's a high probability trade. You're not going to make any money, right? The options market's not stupid. It's not like, hey, this person's really not taking too much risk. Let's pay them a lot of money. So, no risk, no reward, man. So we're going to take a little bit of risk in this trade. So I'm going to come inside of those strikes, probably significantly, right? Let's go back to our kind of technical analysis. Looks like we've had kind of a bottom there at 110 and a high at about maybe 114. Let's look at like 110 and a half. Let's take a look at the 110.5, 110 bull put spread. Wow, those are the, yeah, let's scroll up here. The regular April expiration. Man, there's only about 6 cents in there. That's not too, probably going to have to look at the 111s. Okay. Maybe 150 contracts. And let me look at the risk real quick. Whoa. What the hell's going on here? That makes no sense. Hopefully they're updating things after hours here. Let's do the 111 and a half 111s. 150, 150. And again, obviously folks, okay, this is good. This is better. Yeah, that was weird math there. All right, so, wait, and that's the March 29th. It keeps going back. There we go. Much better. All right, here we go. So this is the bull put spread that I'd look at. Remember, a bull put spread says, I don't think you're going below a certain level, right? In this case, the 111 and a half strike. I'm selling, and again, I'll brief you on in a couple minutes why the 150 contracts, but looking to sell 150 of the April 19. Remember, I moved in the expiration from April 26 to April 19 because of earnings. Why do I like this iron condor even more right now? Because what tends to happen with stocks? They tend to channel into earnings, right? They enter a blackout period, right? 30 days or whatever it is, weeks that they really can't comment on stuff. They enter a blackout window. They ain't buying back their shares, and they're just kind of sitting there on their hands. So what happens? Usually stocks channel into earnings. So this would be a great pre-earnings trade. Okay? So selling 150 of the April 19, 111 and a half puts. That's me saying XLY, I don't think you're going to be below 111 and a half by the third Friday of April. Okay, Wiz, what if you're wrong, man? Blackout, schmack out. Somebody came out, Nike, Starbucks, and Amazon all went out of business, whatever. The XLY implodes. Not going to happen. But if it does, we buy these downside puts, the 111 puts. So this tactic is called a bull put spread, right? And as we covered today, it's also called a credit spread. We're getting paid to do this trade, right? Now let's take a look at our risk. Always, always, always when I click this analyze button up here, we look at our max potential loss right there. Our max potential loss on this trade is $5,400, right around my SOP of not wanting to risk more than $5,000 on any one trade. That's me, folks. You have to sign for your own aircraft. You're the pilot in command of your own portfolio. Don't mind risking 10 grand? Do 300 contracts. Don't want to risk more than $2,500? Do 75. Don't want to risk more than $1,000? Do 20. I don't know. But now that we, as the pilot in command of our portfolio, we can sit here and go, I acknowledge this risk. I understand that is my max potential loss. And like we covered several times since we've started Full Throttle Week, I don't want to take this max loss. So what do? It's easy math, political science math, folks. I simply double the credit that I take in. If I get 14 cents on this trade, if this trade goes up in value to about 28 cents, Uncle Wiz looks at himself in the mirror and goes, why is XLY imploding? Should I eject from this trade now and save my life? Right? Double the credit, then you take it. Now that we've done all this, I know when I'm going to eject for min-loss, blah, blah. Now we can pick our eyes up to Mr. or Mrs. Happy Face, or if you're on United Airlines, MX, right? Gender neutral. Good job, United. Max potential profit is $2,100. All right? Now, this is the bull put spread. This is me saying, XLY, I don't think you're going below 111 and a half. So the bull put spread, or the downside part of this trade, is done. Now let's put a roof on it, right? Let's look at a bear call spread, right? Now I want you to remember this. Risking $5,400 to make $2,100. Remember this. Check this out. Now we're going to add two legs here, and we're going to look at the bear call spread. So 150 and 150. Same expiration. What did we say? It was like the 116. So let's at least start with the one. We'll probably have to do the 115 or 114 and a half 115s. 114 and a half, sell those, buy the 115s. There we go. Okay. Now, let me look at this real quick. Perfect. All right. Now, if you remember, about a minute ago, I said, don't forget this. We were risking $5,400 with just the bull put spread. Okay. Now check out our risk. Does anybody, some of you might be thinking like, okay, man, he just put on a bull put spread risking about $5,400. The bear call spread is probably going to risk around the same. Hey, geez, 10 grand in risk. What are you, smoking crack? The answer is just absolutely not. Check out the max risk of this trade now. $2,500. Look at that, $2,500. Why? Folks, because it's even if, and I call this a football trade. You know, let me widen this out a little bit. Let me do the 115 and a half. Give us a little bit of room to the upside here. Okay, even raising it 50 cents here, folks. Right? Sell the 115. Why? That is wrong. Sell 150 of the 115 calls and buy as an upside hedge the 115 and a half. Yeah. All right, that ain't making sense. Let me reboot the system here, kind of throw some stuff around. 115, sell those, buy the 115 and a half. All right, let me get rid of this and build it again. Sometimes after hours, guys, and they're playing with stuff, but we reduced our risk in half, ladies and gentlemen. Let's try this again. The 115s. 115s, and then buying the 115 and a half. Okay, let's go back and we'll just start with the bear call spread. Let's do that. See if we can attack in the other direction. So let's do the 115 out to April, the regular April expiration, and the 115 and a half. 150 and 150. Right? Bear call spread. Sell 150 of the April 19 115 and buy those as hedge. Yeah, something's wrong with their platform here. See this? Selling 150, that makes no sense. Let's just lower it and see if there's a problem with the strikes. There you go. All right, let's just stick with the ones we had, the 114 and a half, 115. Somebody's updating something. So check this out, folks. The bear call spread is risking $4,800 to potentially make $2,700. So remember what I said. The other spread had $5,400 in risk. This spread has $4,800 in risk. So some of you might be sitting there going, holy crap, Wiz, about 10 grand in risk? No. It's physically impossible to lose on both spreads. Now let's add our bull put spread in here. Let's go kind of backwards here. 150, we'll add the bull put spread that we had on. 150, 150, same expiration. Those are puts. What was it? The 111 and a half, 111s? Selling the 111 and a half and buying the 111s. Boom. Look at that, ladies and gentlemen. So here we go. So one trade had $4,800 in risk, the other one had 54. Check this out. It's not $10,000 in risk. It, as a matter of fact, is less risk than just doing one spread. The one spread had $5,400. Now look at this, ladies and gentlemen. You're risking $2,600 to potentially make $5 grand. Why? How can that physically, ladies and gentlemen, you see this blue line? That's the current price of the XLY. Here is your bear call spread. Here is your bull put spread. Now, the reason I call this a football trade, let's just blow this up. Pretend wow, that's awful. Those are bad uprights. But so there's your bull put spread. There's your bear call spread. Folks, even Charlie Brown, folks, isn't this unlucky? The football, ladies and gentlemen, the stock, XLY, physically can't fly outside of your bull put spread or fly outside of your bear call spread. It's physically impossible, ladies and gentlemen. Let's go back to the chart. You can't lose on both spreads, right? If you're saying, there's my bear call spread, there's my bull put spread, the only thing that can happen is XLY does that or that. That's the worst case scenario. Obviously, we want it to stay within the range here, but it's physically impossible for us to lose on both spreads. Everybody give me a vertical head nod. That's why the risk ain't 10 grand, right? It's only $2,500 to potentially make 5. And let's you know what, Wiz, this is a little too tight. Let's do the, I don't know, 111, 110 and a half. 110 and a half. Okay? And maybe the 115, 116s, 115, 115 and a half. Let's widen the wingspan out, so to speak. Yeah, something's really wrong here. Let me bring up our current iron condor. Let's just do that. Where's my XLY? Here you go. So here's our current iron condor on XLY. Look at this. Risking $3,500 to potentially make $4,500. Yeah, they're definitely after hours banging on the television. Here we go. So with an iron condor trade, ladies and gentlemen, you have 2 break-evens. You have a break-even to the downside in case XLY goes down, and you have a break-even to the upside in case XLY goes up. So this trade right here on XLY that I have on is looking pretty darn good right now. We're risking $2,900 to potentially make $5,000. That is a great risk to reward ratio. Look at this down here, 1 to 0.78. Now let's talk about trade management. How do you manage an iron condor? Well, the first thing you do is you don't. Okay, well, that makes no sense. I don't manage an iron condor as an iron condor. You know how I manage it? As 2 individual spreads, a bull put spread and a bear call spread. So treat it as 2 separate spreads, right? So let me open this up here. Let me open up our XLY positions. So here is the, hang on, let me find it. There it is. Here's the bull put spread, the 111, 111 and a half bull put spread. I treat it as its own standalone trade. Remember, we have an SOP. If I'm looking at a 70, 80, or 90% profit on the credit that I take in, let's close it. Conversely, what's my cost basis here? Cost basis is 11 cents. So I got filled at 11 cents. If this thing goes up to about 22 cents, that's when I look to eject and get out and don't take the max loss. So I treat the bull put spread as a standalone trade, and let's take a look at the bear call spread, the 111, the 114 and a half, 115 bear call spread. Same thing, right? What's my cost basis on that one? Cost basis is 17 cents. So this one, double the credit that I take in. If it goes up to 34 cents, I look at myself and go, man, do I need to eject out of this trade? And same profit target, 70, 80, 90% of the credit that I took in. Yeah, you got it, Michelle. Exactly. So it's the exact opposite of the tactic we covered this afternoon. This afternoon, we covered a bullish double vertical, right? Even the name just sounds, holy crap, bullish double vertical, man. We need to see volatility spike in a bullish double vertical. In an iron condor, we need the thing to stay in a range, okay? And it looks like XLY is, in fact, staying in a range. So this iron condor is looking pretty good. So it's just 2 spreads that are kind of facing each other, folks. Bull put spread and bear call spread. And I like this iron condor that we have going down range. So check out what we're doing with XLY, folks. We have technically 3 trades on. Bull put spread, bear call spread equals an iron condor. That's one trade. The second trade we have on is synthetic stock out to January of 21. We're long-term bullish on it. And then the third kind of trade that I have on is the front month. We're selling some upside calls. So check this out. I sold 10 of Friday's 113 calls. So these calls could potentially bring in $460 by Friday. So when you think about it, ladies and gentlemen, look at this. In one name, we kind of have three things going on. Iron Condor, synthetic stock, short calls. This is enough to keep you busy. This is why I tell you, stay in your lane with, 5, 6, 7 names, right? The sector targeting that we talked about. Raytheon, Visa. I haven't talked about Visa in a while, but stay in these names, folks. Don't have a bunch of ships all over the place. A lot of folks, I equate your current portfolio to like the cockpit of an F4 Phantom. About 300 switches and dials in that F4 Phantom back in the 70s, right? Well, guess what the F-35 cockpit looks like today? 2 flat screens, right? The F-35 Joint Strike Fighter is so advanced that the computers actually limit the information that they show the pilot. The F-35 is smart enough to go, you know what? He or she really doesn't need to know that right now at this point in time. Whereas in the old days, 300 gauges, man. So, how do you battle complexity with simplicity, right? We need to simplify our portfolios. Stay in about 7 to 10 names and trade the hell out of those things, right? We're long-term bullish on Raytheon. We've hopped in our time machine. We've gone all the way out to January of 2021, and we put on a bullish synthetic stock position. Now, for those of you who are sitting here going, what the hell is a synthetic stock position? There you go, a little foreshadowing. Become a member, and you'll get access to about an hour and a half synthetic stock training session. But there's no way, you should not buy Raytheon stock. It makes no sense when you can use options to do the same thing as what the stock's going to do. So you get a synthetic stock position all the way out to Jan 21, and then what do? Start trading front months, folks. What's the front month? We're in it. March, April, May. Those are what are called the front months. So not only do you have this Jan 21 great-looking bullish position on Raytheon, here's another great Iron Condor candidate right there, guys. At Amazon, sorry. Raytheon had a nice run, and now we're kind of leveling off right around this 50-day moving average. Why? Most likely this thing's going to channel into earnings April 25th. Look at that. This would be another perfect Iron Condor candidate. And we're long this name, right? Trust me, folks, it simplifies your cockpit when you're trading kind of the same names, right? Raytheon, MGM, I haven't talked about MGM in a while. Maybe we'll talk these names tomorrow in our final full throttle brief. MGM kind of getting pounded lately, but here's the good thing, ladies and gentlemen, is you can still be making money. Folks, by January of 21, MGM is going to be around. Matter of fact, I think it might even buy Win. That's the rumor. And MGM is also what? A China trade deal play. Why? Macau. Folks, I've been to Macau. I gave a keynote in Macau, big speech to Macquarie, the big investment company. Macquarie is kind of the Goldman Sachs of Asia. Flew to Macau. And now I know why they take a lot of pictures in Vegas, man, because Macau looks exactly like Las Vegas. But I think MGM's absolutely going to see a nice little pop on the announcement of a trade deal. Absolutely. But so this is what's funny is your Jan 21 synthetic stock might not be, it's not looking so hot right now. We're showing a little bit of loss. Well, guess what you could be doing? You could be making money by selling calls or doing a bear call spread, man. And then when it turns around, do bull put spreads, right? So it's a great tactic, folks. I'm going to teach you all this stuff here at Top Gun Options. And like I said, as soon as you get airborne, as soon as you get your password and you become a member, underneath member, well, the first thing you need to do to reduce frustration is watch the getting started video, right? This is why it's the first thing. Watch this getting started video. I'm going to give you a complete brief on, it's about a 20-minute video. Here's the trades, the trade alerts. Here's where you find the content. This answers every question that you could have as a potential member. But underneath the member content, click on Full Throttle and get in here and watch the training, right here, session 7, Full Throttle session 7, synthetic stock and long call diagonals. And guess what name we did it in? Amazon and XLY. So if you kind of like the sound of it, hey man, you know what? Might not be able to afford being long-term bullish on Amazon. I like your idea, Wiz, of using XLY as a proxy, right? One more time. Amazon is 24% of the XLY, and some other names that ain't too shabby. Not a big Nike guy, not a big Starbucks guy, but those things aren't going out of business anytime soon. Okay. And, one last thing I forgot to brief as kind of a benefit here is you get access to what's called the Ready Room. Now, this is our interactive forum, folks, where you can get in here and talk back and forth about Brazil trade on Boeing, Amazon calls, doing your homework, blah, blah. We are living in feudal times, Intel. So this is our online forum where folks get to interact with each other. I jump in there, answer questions and stuff like that. So in between our live trade briefs, you can actually get in the Ready Room and interact with your fellow traders. So that's kind of an added bonus as well here at Top Gun Options. Yep, I was just getting ready to do that, Rebecca. If you head to go.topgunoptions.com/getft, that's where you can grab your slot here. And my phone kind of buzzed about 4 times throughout this event. So obviously, what is it? It's a Wonderful Life or something like that. Every time a bell rings, an angel gets his wing. Every time my phone buzzed during this brief, yep, about 4 of you guys grabbed. There's 3 max slots and a defensive. Awesome. Okay. So, folks, this was kind of a sample session of the 8 Full Throttle sessions that you're going to get access to when you become a member. Just a quick reminder, we charge $495 just for those 8 sessions here. You get this as part of being a Full Throttle member. And the next time we do Full Throttle, and the next time, and the next time, you get access to this. I mean, we have a couple members that have been here for the 9, almost 10 years. And as I briefed at the beginning, they say, you know what, Wiz, I learned something new each time you do one of these sessions, which is a testament. And folks, I got to be honest with you, I do continuing training. I have mentors in the industry. I got buddies that I talk with. I still go and do my training and talk to other folks, and I learn new stuff. And of course, I pass it on to you. That's one of the benefits. It's kind of an unwritten benefit that you get here at Top Gun Options, folks. Whether it's Raytheon or FXI or some of the other positions, kind of got a big Rolodex of folks that are still in the military, very, very high-ranking folks, and also in the business world. Many of you know my sister runs Dune Capital in New York City. She was partners with Steve Mnuchin, the Treasury Secretary. My sister has worked with Donald Trump before. If you're on my Instagram, you've seen pictures of my sister with the president. So, obviously don't trade on inside information, but I have enough in my Rolodex and in my phone here where I can pick it up and talk to some smart folks. Another reason why you should get on board here at Top Gun Options, okay? Any questions about the Iron Condor? I like the Iron Condor that we have on right now with XLY. It's looking pretty good. Let me group it back together here. Let me put our Iron Condor back together. Where is it? Puts and the puts and the calls and the calls. I like this. This is why we teach off this platform right here. I don't execute through E-Trade. The prices are prohibitive. TradeStation, if you're a first responder, folks, or a veteran or active duty military, give TradeStation a call and they'll hook you up. I don't get paid for that. I'm just smart. So here's the Iron Condor that we have on XLY right now going down range. Risking about 35 to make $4,500, and it's looking pretty good here, going right down the fairway. Okay, and look at that. I mean, if this goes right through the uprights like I fully expected, $4,500 on one trade, ladies and gentlemen. That's almost 2. That's a year and a half of max membership. We looked at closing a CME trade today for about $1,700 in a week. We have a Nike iron condor that's I have a tight iron condor on Nike that's going down range. It's a weekly options trade. We got a lot to cover tomorrow, folks, because tomorrow and Friday are big macroeconomic days. We get the final GDP print tomorrow, and then Friday is just a slew of macroeconomic data. Inflation, personal spending, personal income, Chicago PMI, new home sales. I mean, I'm running out of breath here. Friday is going to be huge, 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 huge. So, all right. So if we don't have any further question, ladies and gentlemen, I'm going to adjourn for the night. Going to go watch hockey and hang out with my kids. Our final full throttle brief is tomorrow at 1 o'clock. Okay, 1 o'clock is the Analyze Your Trade and weekly debrief. And obviously, if you guys are hearing my voice right now, you are obviously registered for that event. So, and if you need to watch any of the replays, they are on this page. go.topgunoptions.com/FT replay. You bet, Perry, you are welcome. Let me scroll through all the stuff. There's Tastyworks is probably the next reasonable. Elaine, I hear good stuff about Tastyworks. Free, the 4-letter F word that I like the most is free. And if you're a first responder, a veteran, or active duty, TradeStation hooks you up with some commission-free trading, which if you're an active trader like me, that goes straight to the bottom line. I mean, that's something I can't pass up. But this, I got to be honest, I helped build Options House, folks. Trade Monster, No John and Pete Nigerian, and then E-Trade ended up buying both of those guys together. It's a good platform to teach from. I know a lot of people who set up their trades on the E-Trade platform and then go fire their trades somewhere else that is a little bit better as far as pricing. We'll talk about brokerage firms and commissions and all that stuff as part of our full throttle session number 1. As many TGO members as there are people at different brokerage firms, okay? And we'll talk about picking up the phone and calling and saying, hey, I'm leaving and going to brand X, and them lowering your rates potentially, okay? Remember, whenever you hear the term broker, whether it's real estate or trading or a yacht, it means negotiable. Whenever you hear the word brokerage or broker, it's negotiable. So if you're paying exorbitant brokerage fees, you're trading with the wrong folks, okay? All right, guys, I'm going to get going. Welcome over. The phone just buzzed again. That's Ronald. Hey, got engaged in San Antonio. Ronald from San Antonio is a full throttle max. Welcome aboard, Ronald. Tomorrow at 1 o'clock, we're going to do our final full throttle brief, and then we're going to get airborne, hopefully with you. But, folks, I've never seen this in my entire career. 1, 2, 3, 4, 5, 6. 6. That's a sextuple top. I've never seen anything like this. And when somebody like me says I've never seen something like this, that's time to maybe go grab the hedging tool or the dredging tool that we grabbed this afternoon, and maybe get ready to potentially eject. We can, as an options trader, folks, we can potentially make money no matter if the market's going up, down, or sideways, and I'm going to teach you to do that here at Top Gun Options, okay? So have a great rest of your night. Happy hunting. Make sure you hedge. God bless, and I'll see you tomorrow afternoon for our final brief at 1 o'clock.